So in the Echo Traders room here this morning on our NG or 6E, I'm sorry, we're looking for the price action to get down to 1.0719 right now and farther. So on the NG, we were talking about our target down here at 2.636 and looking for resistance at 633. Looks like we may get that. We're down into our support and resistance. So we'll see if we can get down a little beyond that. This is the chameleon that we talk about that will keep shifting and shifting until something has to snap, has to give, right? And our support is down here on NG. And we have support written in at 580. Okay. And that's at 580. It's down quite a little piece yet. Okay. Way down here. Okay. We'll come back to this here market after a little bit. So what we have on our YM is a target of 17,858. It does not mean it'll stop if we can get down into there, but we'll look for an exhaustion area, and so far this has been exhaustion area. We'll zoom in on this part of your YM. So the number that we're aiming for here is 17,858. The market is trading below the moving averages, and you have alignment. MACD is to the downside. Now we have been extended quite a ways below the zero, so we do look for a pullback to the upside. Whether we can get that, but this here sandy shaded area is your support and resistance line on your YM right now. So it's not a long ways to go here to get exhaustion, and we'll be coming into your market, your stock market open at 9:30, and we'll see if that'll exhilarate us to our downward target. So it's only about 30 ticks left to go to that target. We'll see if we can get some a catalyst, some volume to come in and push it down to the target of 17,858. We'll check back on this market after a little bit. Okay, so on the light sweet crude instrument, we call it CL. We had talked about the market coming to a resistance area. We were looking for 5650 and 5652. It made it to the money off at 5650, indicating 52 is definitely resistance. The market the price action candle has moved below our EMA and our confluence targets to the downside. Right now are 5586 and down into the shaded area below. We'll see if we can get a push down in there. The market is making lower highs and a lower low, but it's still a higher high. We have to take out the low at 5588. We'll see if we can get down there. So a quick look at the 6E. We're looking for that resistance to hold, and the bulls are quite powerful here. They're pushing the market back up to, we're looking for that resistance ceiling to drop some more and get to the target of 0719 and beyond if we can. The market has taken out the low over here, but no bodies below it. So it's a risky business. No bodies below the low.
Market is open.
Thank you. So the CL, as we had mentioned, we wanted to see 5586 and beyond, down into this here shaded gray area. We're trading resistance on CL, and it's proceeding quite nicely at this time. All right, so we were looking for the acceleration of the market open to bring us down that extra 30 ticks into an exhaustion area of 17,858 on the YM. The market has complied with that request.
Order filled.
Has complied with that request to get down in here to 858. I'll just put an arrow on here, and you'll hang on to the runner if you can. Here she goes, here she goes, here she goes. We'll turn the text on the right. Get that on over here. I think it's this one. We'll just put that on the right for now. So this is a support area, as we had mentioned. Okay, so we're looking for an exhaustive point. Looks like we're getting it right now. So this is why we recommend you use stops, so you can make sure you get the money that is owed to you. Okay, we'll come back. Oh, and we want to check our TF here. So we'll switch to your TF. Find TF. So TF, we were talking about the, oops, we don't have the chart up yet. Hang on one sec. We'll go full screen. TF, we were talking about your 1258.9 as a support and resistance area. I'm just going to enlarge that area over to the right hand side. So the market has produced a higher low there, and we'll look for the market to run up to your SMA, the red line here, that area, and that area is right now is at your 61.8%. And on your YM, it was had hit the exhaustion. On TF with the 100 here at 1253.3, our money off target stands. Let's, if I can grab a hold of the target, the money off emblem here, just a second. Whoop. Okay, so that's at this, and we did not break violate the 100 down here or the 0. So we'll look for a pullback up into the top of resistance, at least that far. And that's your 61 on your downward fibs. 1262.4. So we'll see if we can get up into that area. So from 1258.6, your first target from there is, or your second target from the low, is your 1261.4 that we mentioned earlier. We'll come back to this market after a little bit. this part of it. So at resistance, our money off at 56.50. We didn't reach the 52 we were looking for, which is fine because that shows us our resistance is holding. And down through the EMA, it comes a slight divergence on the MACD, the momentum, the pistons are all firing. Our target down here was 5586, and we look for a pullback into resistance. Now, the area that we're looking for resistance is a little larger than we like to see, but you know that we can't help that. So what we have here is a resistance area to your 61 and your 23 here to grab a hold of the EMA. And I'll just highlight the EMA is the blue line on the chart. And so the market has come up into that resistance, up into your 5599, your 56. Market likes round numbers, so we'll see if we can hang on to that runner to the downside, and we'll just see how that goes. We'll check back on the CL after a little bit. So the money off at 5586 had taken place, and the market has taken out our stops and locked in money and has proceeded back to a resistance area, larger time frame. And we're retesting the lower spot of that resistance area, and we'll zoom in. Whoops. And that's your 61.8. It's retested, so we said half of this candle we would look for a pullback to the downside. We are getting that right now as we speak on your CL. We'll look for you're extended away from the EMA here, so we'll look for pullback to support. This here was resistance, and we'll look for this area here to become our new chameleon, at least for a little while. And you can extend this here up to here. And we'll check back on this shortly. So on the YM instrument, we had mentioned about looking for the extra 30 ticks for the market open on your stock market, for that to accelerate you to the target of 17,858 and hold on to a runner if you can. Now you're extended away from your EMA, so yeah, you don't want to give all that money back. You have to have your stop in place. We like to use the large red candle here and make sure you don't give it all back. If you've already taken yourself out of your short position, that is fine. This is a great place. This is taking out this here low candle here. I'll just borrow this ellipse over here. Similar. And the bulls are pushing the market right back up. We were to look for exhaustion here at 17,858. That cuts right through all your candle bodies right here, and that's what we really like to see, is that if you can go into a continuation trade and the MACD diverge, more divergence there, more divergence on your moving averages, you'll have a continuation. So we'll look to hang on, and you're going to manage that trade with your stops. So you'll use your stop and get that in place if you haven't already. I know most all of you that have been in the room any amount of time would already have that stop in there, and you're looking for your next target to the downside. And we'll come back on this. We'll give you that target area here. So on the larger time frame, we have 17,748 as a money off. We'll look for the market to get to that target.
Okay, I'll be away.
So we found our confluence area of 17,748 and 17,750. That's a great place to lock in some money. The market is pulling back to a resistance area. What we want to see next, we knew the resistance area will at 17,795. We want to see the resistance ceiling drop to here. Your divergence is on your moving averages fairly significant, 65, and the MACD is starting to curl to give us the look for support signal. Okay, so we look to pull back to resistance when we're getting that. The momentum has been to the upside, but it's been a hard old struggle from 50 to 95. This is tradable if you have a plan to do so. And if you don't, that's fine, because what we're looking for is the resistance ceiling to drop to give us this year pullback to the upside to enter short to go to our targets. Now I'll show you where the target remaining targets are if you can hang on to a runner that far. You have 693 and 655 as your next confluence. We don't want to see the market pull all the way back up to this here white line, this white arrow on the chart. Okay, that would be way too much to give back for your runner. So we want to see the this is your new support area here. All right, so that's new structure lows. And we want to see your resistance ceiling. I find resistance here written on the chart somewhere. I don't see it, so we'll just write it on. And what we want to see is your resistance ceiling to drop right to this shaded area here. And we'll just put, there we go. Whoop, too many E's. All right. One finger typist. Well, I have one finger on both hands, I guess, so two finger typist. All right, so we want to see the resistance ceiling drop down into here, and it has been up here. So we'll see if that 100 at 17,795 can hold. And your resistance ceiling this year would have been support. Change it to resistance, right? That's the way support and resistance interchange, right? So a lot of times we'll put S and R. All right, so that's what you're looking at. Here's your confluence, 748. The market came to 743.5. Okay, so we want to see your new resistance hold here and then proceed back down into your next targets down. We don't know if we can get it, but you're going to try to hang on. That's not too bad to hang on to a runner on a $5 instrument, but it is $200. So if you've taken yourself out, that's even better. Then now you can put it back on. Best place to be wrong. You can watch the video on that. Okay, let's look at a couple of markets here. It's 2 minutes after 11 a.m. Eastern Standard Time. On the left of the CL market, and we'll enlarge that chart, has come to the resistance area that we talked about earlier. It did reach the 5652 that we talked about earlier. That's the cyan line right here at 5.2 up into the resistance and is retesting way down to support. We'll see if support moves up the hill and holds at your SMA 200. The amount of momentum in this here move looks like they want to drive her down here for a little bit. So just lock in your profits from your entry. Your entry on CL should be up around, right up around here at 5687, and that's your red line on your chart. The line may not show in text formation, but that's your red dotted entrance line, and you were filled. Best place to be wrong. And it's at 8.7, not 8.6. The cursor shows when I put the arrow on here at 8.6, but it's really a 7, and we'll just make that red. So that's a great place to be wrong on a short entry, right here at 8.7. We could turn the text on there when we get a chance. We're going to pop back to your other instruments here. We're on your TF. We were looking for the target of 1246.8. It has just reached that target of 1246.8, and our confluence area of that's where you're going to lock in money. Now, if you take yourself out of the market, that's fine. Nice positive win. Your target is 1243.4 right across here, and we put the target area in the shaded for your TF. All right, so we want to look at your YM. We want to discuss more on your YM. So let's. That's a nice market moving in the right direction. We had talked about the pullback to the 17,795 area. That is right here on the chart. Just one second. And we wanted to make that resistance so we could go to our next confluence targets. And I'm just going to move the chart up the hill here, and whoa baby, that's not it. Let me try that again. See if this works this time. There we go. Here we go. So we shaded that area in pale blue, somewhere between 727 and 710. We're trying to get to 693. We had talked about if you had taken yourself out of the market at 1748, that's a nice trade, that you would either trade that back to resistance or wait for the market to come back to the resistance, show you that, hey, yes, I'm okay with entering short again for your extended targets. That's what you're into right now, is you're going into extended targets for that complete continuation trade. This is not out of the woods yet, but things do take time. 17,693 is your target. See if we can get down in there. So the next instrument we want to look at that to follow up on our projection is your NG. So let's expand this year chart. On NG, we wanted to get some money off at your 638, and you're looking for that confluence area of exhaustion to 633. So I said 638, I meant 2.636. We want to take a little position off there on our destination target of 2.580. Don't know if we can get down there, if the market will have time today or not, but that's what we're aiming for, the larger target, okay, on your NG. Next, we'll look at your 6E. We'll come back to your 6E, see what took place over there. Okay, here we are on our 6E instrument. This is the 6E chart. What we've had happen here is our MACD has indicated to, whoops, look for a short. I wanted an ellipse. I grabbed a okay. Arrow is fine. The MACD has indicated look for resistance. We found resistance and we traded resistance short. Now since then we had mentioned our target at 0719. I'll show you that target just as a reminder. And we highlighted the 6, I know that's kind of a messy, 1.0719. That's our next target on our quest to get down to 10686. We had mentioned the arrows here that the bulls had pushed that candle right back up, so we'll zoom in on that area and that you'd be pulling back into a resistance area. So this here's the candle that we referenced at the time, the green, get a hold of that, there we go. This, get a hold of this. This is the candle that we referenced with the white arrows. Our quest to get to 0719 is definitely on hold. This would be way too much money to give back, as we had showed that the MACD would be looking for support. So you must say, okay, where is support? And on our chart, support and resistance is right between here. 0804, which the market has just come back to, and your 0771. So you can see at 0771 the market, the bodies of this here move up above your EMA, and you're trading from the bottom side here all the way back up to the top side. So that's your 6E, your shorts, your short position are off the table. So we were talking about in the room to watch for momentum to the upside to slack off as the MACD comes through the zero. It may not come through. The EMA has not come through the SMA. So we're watching for a lower high. Lower high puts your short positions back on target. Indecision here, you're in this here pullback of support and resistance. Our entry for short comes in at your 23, 1.0804. If you took that, you took about 2 or 3 ticks offside. A nice fill, and if the market can drop down below your moving averages again, that puts those in alignment to the downside, and your target would be back on. All right, so watch for the momentum to the upside to cease, and that turns from yellow to blue, and then you're going to look for, on your 6E, you'll look for this here to take place, okay? No, whoops, that stays in 1, and your exhaustion to the upside would be back in play. So let's pop over to your CL. So far so good on your 6E continuation to the downside. So now we want to take a look at your CL, similar to what we had just talked about for your support and resistance areas. All right, so this time your EMA has not crossed down through the SMA. EMA in blue has not crossed down through the SMA in red. SMA is flat, but this here is shaping up to be a pretty nice trade, whether we can get all the way down to support or not, because you have this here as a contention area. I'll just slide it across. That's been our support and resistance. Chameleon, as well as this one up here, your resistance up here, your entry area at 87 has been retested and retested again with, I find this here line, with lower highs. So lower highs, and we're dropped right down below our EMA again. So our EMA here where the pen is has held nicely, and the only thing that's holding this here trade back is we don't have moving average alignment to the downside. It is a positive trade, so you must be using your due diligence to manage that trade. And again, our MACD has indicated to look for that resistance area, which you already had on your chart. You had it coming up the hill to between your 61 and your 76. What else? We're down into your support and resistance area and breaking down through. So they've retested the high, and you look for the bottom. Now, to have this here continuation down to, and if you remember, your target here on CL is 5562, and your confluence area was 5564. We'd like to see the market move all the way down to 5507 today. Can we get there? That's another 100 ticks to the downside. We'd have to break the low back down into here. So far, it's going that way. So again, use your due diligence. You'll look for a pullback to the upside to drag the EMA down through the SMA, and your divergence is getting less and less, so the pullback to the upside should not be painful. And on the NG, we already talked about the 2.636 target, so that has been reached on your NG. And your TF, the chart in the center, our target was 1246.8. That has also been reached with the recording. All right, so here we are. We're still looking at the CL short position, and as well as 5562 being the target that we mentioned earlier. Right now we have 5598. The market's almost to that target of 5598, and we should get there. That's looking pretty good. We're going to go to properties, properties, and we'll turn this here off so it's not interference with anything else that you might be looking at. What we want to do is keep our charts as clean as possible. So there's our target of 5598. You have 5588, 5573 right back into that gray area. So if we get the momentum here, our MACD is coming through zero. You have good divergence on the MACD at the top of this here chart. We keep the MACD at the top where a lot of people put additional indicators. That's what your MACD is. It's an indicator. They put everything at the bottom because normally your main chart, it winds up at top, and we've changed that. We want to see our MACD it's at eye level. Okay, one thing. So that tells us volumes when our for example, here on your MACD, your momentum in yellow, when that runs out to the upside, okay, and it turns blue, and then your next yellow here where the crosshairs are, okay, the next yellow here. So we look for that as an indicator, and each one of these histogram bars on your MACD are in line with particular candle. Each one has its own histogram to let you know what's going on, and then your volume is in the color of the candle. So your volume on a green candle, the majority of the volume is toward the upside. So here comes your 88. We look for that target. We look for 5573. We do not counter trend momentum. Don't do that. It's dangerous. Okay. All right, we'll come back to this here chart in a few moments. Let's look at something else. I guess I'm not going to stop. Okay, so the market has come to a 5588 right here, 5588, and it's pulled back, and we put this here set of fibs on. We were a little late getting this here on. That is additional. This here is your simple retracement fibs from here, and the 100 comes from the low that we had talked about here, and some members in the room were already doing this, so they already had this here fib on. So whichever set of fibs you're using is fine. So that's the extension fibs or your simple retracement fibs, which often are the best and easiest to put on. I'm just going to put this in white. You can see where it came from, that low. All right, that's a great fib to put on, and your entries at 56.62. If you didn't make 56.71, that's fine. That's a little bit better, but not a heck of a lot on the bigger picture. Still, the best place to be in a short position is from a resistance area. You can't forget that, and you trade to support always. So the market's not quite at support, but it's certainly trying. We'll come back and check on it after a little bit. Our target 5573 and 5562. So right here at 5588 and over here at 5588. So I'm just going to use this ellipse so I can. All right, 5588 right here, your 141, and over here, you look left. This has been a low, so be careful. Let's check back with that 6E, as the CL should go to the targets. They've find 6E. Okay, so the 6E, we have this here. It's kind of range bound here. We have this here shaded area support and resistance right here between 0804 and 0771. So this here has been stuck in this here little range here tightly. EMA is not above the SMA. MACD just coming through the zero now. So we may see the EMA push to the upside and another. So this year trade just never materialized to complete downside targets. And we had mentioned your downside targets were off until we had that pullback to the resistance complete. So again, it is a lower high. So you can draw your diagonal from up here. And you take this here down across. So that's your resistance area on the diagonal. Now, they put a candle body above that. You still don't have a short. Even though the EMA is not up above. It's just too dangerous to proceed. So you want to see the candle body drop below the yellow, and you're not getting that. So it's too dangerous to go short from here. Even though moving average alignment is to the short side, they've taken out your stops. So 6E this time of the day is it's Friday. They're all done over there. All right, the weekend is on. Okay, so don't overdo it. Even if they go to target today, don't overdo your trading on an instrument that has run its course. All right, they made it down to our target of 0.752, and that's pretty good. You know, hey, 0.752, and they came down through that by about 10 ticks. So here's your 5.2 roughly right here. Right there. All right, so they only came down through that by about 10 ticks to 0.742. So there you go. Your bodies are above the diagonal. Your resistance line is still 0.804, but we're not in a 6E anymore today.
Dale, I sent you a